All right, let's dive into Vontier's second quarter earnings for 2025. This was a big one, a report that really sent a clear signal to the market. So in this breakdown, we're going to unpack exactly what that signal was and what it means for the stock going forward. So, right out of the gate, Vontier delivered a huge beat on the bottom line. Their adjusted earnings per share, it came in at 79 cents. That absolutely blew past what Wall Street was expecting. They were looking for 72 cents. That's a nearly 10% surprise to the upside. And, it wasn't just about earnings. The top line, the revenue, was just as impressive. Vontier pulled in $773.5 million, which beat expectations by over $39 million. That's a really powerful 11% growth compared to last year. So when you put it all together, a beat on earnings, a beat on revenue, and they got more profitable, expanding their operating margins, well, the market's reaction was pretty clear. The stock jumped over 4% on the day they announced. That's a big thumbs up from investors. This was what we call a classic beat and raise quarter. I mean, it's the kind of report card that really builds some serious confidence. So let's get into what was behind these great numbers. Now, this slide right here tells you the core story of the quarter in just one look. You've got two segments, Environmental and Fueling Solutions and Mobility Technologies, that were just on fire, growing well over 16%. And that incredible strength completely papered over the fact that their third segment, Repair Solutions, was basically flat. So let's pop the hood and see what's really happening inside these different engine rooms. What was fueling that explosive growth in two of them, and what was holding that third one back? Okay, for Environmental and Fueling Solutions, let's call it EFS, a huge tailwind is this big tank replacement cycle happening in the US, and management said we're still in the early innings of that, which is great news. Meanwhile, over in Mobility Tech, the story is all about their Invencos payments platform, which, get this, grew over 20% for the fourth quarter in a row. That's some serious, consistent momentum. And this lines up perfectly with what the CEO, Mark Morelli, was saying. He framed it as disciplined execution, basically saying his team is performing at a high level, even with all the mixed signals we're seeing in the broader economy. But it wasn't a completely perfect picture. Let's look at the other side of the coin, Repair Solutions. You can see the contrast here is stark. Flat sales and their profit margins actually shrank. This part of the business is facing some headwinds because technicians are pulling back on spending for those big-ticket tools. It was really the one persistent soft spot in an otherwise fantastic report. Okay, so with that performance picture clear, let's turn our attention to the road ahead. How does all this fit into management's strategy, and what are they telling us to expect for the rest of the year? And here's the key takeaway. Management is telling us this wasn't just some one-off great quarter. They're actually raising their forecast for the entire year. And they're boosting their free cash flow target to 100%, which basically means they expect to turn every single dollar of accounting profit into a dollar of cold, hard cash. That's a sign of a very healthy business. So what's their secret sauce? Well, a huge part of the Vontier story is their internal framework, something they call the Vontier Business System, or VBS. Think of it as their playbook for being incredibly efficient, and it's a big reason why they were able to grow their profit margins even with inflation pressures out there. And that VBS system, it fits right into their bigger growth playbook. This four-step plan is what's guiding every decision they make. It explains why they're so focused on things like the Invencos payment platform and why they made small acquisitions like Sergeant Sudz for their car wash business. You can literally see them checking off the boxes on their strategic plan. And that playbook also tells them what to do with their cash. They're taking a really balanced approach, investing in acquisitions to grow, but also returning cash to shareholders. They bought back another $50 million of their own stock this quarter. That's $105 million so far this year. And they did all of that while still getting their debt under control. That's a sign of smart financial management. Which brings us to the big question. What does all of this mean for the stock from here? So let's get to our final section, the next call. After digging through this really strong beat and raise quarter, the fundamental question for any investor is simple. What's the call on Vontier? Well, let's break down the bull case versus the bear case. The bulls are going to point to that awesome high-margin growth in mobility and that long runway for growth in the EFS replacement cycle. The bears, on the other hand, they're going to focus on those nagging headwinds in the repair segment, and they'll probably point out that some of Q2's strength came from pulling some shipments forward from Q3. But for us, the most important point is this. The company's big strategic pivot towards software and recurring revenue, it's working. It's actually happening. Vontier is successfully transforming itself. The growth engines of mobility and EFS are now the main characters in this story, not the old cyclical tool business. And because that growth engine is now so powerful that it can overcome the drag from the legacy business and still drive solid earnings growth for the whole year, our rating on Vontier is outperform. So that's our call. But the key question for Vontier going forward is definitely this. Can the strength in their new growth engines continue to outrun that slowdown in their legacy business? Now, as always, just a reminder, this is for informational purposes only. It is not financial advice. Please be sure to do your own research before making any investment decisions.